get ready for a major shakeup in your retirement savings. President Trump has signed an executive order that could revolutionize the way Americans invest their 401k funds. But here's the catch. It's a controversial move that has experts divided. This executive order is a game changer for the asset industry, opening up a massive $12.2 trillion market to financial managers. Private assets, such as private equity, cryptocurrency, and real estate, are now on the table for retirement savers. But is it a wise move? Financial planning expert Robert Brokamp from The Motley Fool believes it offers everyday Americans a chance to invest in a wider range of companies. However, he also highlights the increased risks involved, especially with the lack of transparency and liquidity in private markets. Critics argue that this could lead to significant losses for retirees. Benjamin Shifrin, Director of Securities Policy at Better Markets, sheds light on the fees associated with private assets, which are significantly higher than typical 401k investments. He warns that private funds can charge up to 20% in performance fees, a stark contrast to the 0.3% charged by target date mutual funds. The executive order directs government bodies to reevaluate their guidance and consider facilitating access to alternative assets for retirement plans. Shifrin believes this will encourage more 401k plan managers to include private market assets, despite the potential risks. But not everyone is on board. Certified financial planner and attorney An Tran, managing partner at Sagement Wealth, warns that investors may be lured by the promise of higher returns without fully understanding the risks. She emphasizes the importance of proper guardrails and education to prevent irreversible losses. Knut Rostad, co-founder of the Institute for the Fiduciary Standard, shares similar concerns, fearing that retirement savers could face significant losses if private assets are included in their 401k plans. He predicts a potential train wreck if proper safeguards are not implemented, and the inclusion of cryptocurrencies adds another layer of complexity and risk. Shifrin from Better Markets highlights the lack of investor protections in the crypto space, creating a separate category of risks for retirement savers. Despite the concerns, the Securities Industry and Financial Markets Association, SIFMA, welcomes the announcement, arguing that it will improve diversification and offer more investment choices for retirement savers. Kenneth E. Benson Jr., President and CEO of SIFMA, believes that policy changes can democratize access to private markets. Experts emphasize the need for education and safeguards, especially for younger investors and those without professional financial advice. The potential consequences of this executive order are far-reaching, and the debate over its impact is sure to continue. So, what do you think? Is this a step towards financial freedom or a risky venture? Share your thoughts in the comments, and let's discuss the future of retirement savings.